Hey guys, what's going on? Jeb here, and in today's video, we're going to be doing a little bit of technical analysis on Bitcoin and the cryptocurrency markets, and we're also going to be talking about the stock markets because over the last couple of trading days, the stock markets and the S&P 500 in particular have actually had a little bit of a bounce here. Now, we saw the S&P 500 retrace quite a lot from its all-time high, down around 20%, retraced almost exactly 20% before seeing a little bounce here over the last couple of days of around 5%. Definitely a very nice thing to see coming out of the S&P 500, which could perhaps be warding off a bear market in one of the largest stock indexes on the planet, the S&P 500. We're going to be discussing that in today's video because a lot of people have been calling for a little micro bounce around the 20% retracement level on the S&P 500 and on many other major indexes like the Dow Jones Industrial Average, but I was waiting for that to actually happen and us to actually see one, and the day after Christmas seems to have brought that. So we're going to be discussing that and more in today's video. So if you guys enjoyed today's video, definitely consider dropping a like, hitting that subscribe button, and smashing the notification bell, guys. It does help out the channel if you do it, and it would be appreciative if you did it. But without much further ado, let's go ahead and get right into the technical analysis. Bitcoin is what we're going to start with, of course, because this is the Crypto Jeb channel, not the Stock Jeb channel. Bitcoin is currently trading around $3,730. And if we come in here to the hourly chart, what we're going to see is that Bitcoin had been moving up here. It was trending upwards above this uptrend of support right here. And we broke below it a couple of days ago back on Christmas Eve. And we've been trading down here ever since. Now, I've seen people draw this pattern that Bitcoin has moved into in a couple of different ways. You can draw it as a pennant like this, where you have an uptrend and a downtrend, making kind of a very wide pennant where the convergence point would be way over here somewhere. But I've also seen someone like myself draw it as a descending triangle pattern where you have a flat level of support, because both of these levels of support seem to be very, very similar. That's kind of how I'm drawing it. Overall, what this seems to be is some kind of flag here on this little downward movement on Bitcoin, and will more than likely, based on statistical analysis, break this level of support and move a little bit lower. I don't think we're going to move much further down though, because I do expect Bitcoin to get a bounce somewhere above $3,600 and complete that inverse head and shoulders pattern we talked about in yesterday's video. You can check the video linked in the top right if you're interested in that. Anyway, let's go ahead and get on to the crypto market recap and get on into this. Bitcoin across all exchanges is currently trading around $3,780. It's down by 0.5% in the last 24 hours. XRP and Ethereum are also down 1% and 2% respectively, trading around $36 and $124 respectively. If we sort by change over the last 24 hours here, we see Eternal token is eternally in the green today. It's up 145%. I think in yesterday's video it was up like, or it may have been the day before that, Eternal token was up like 80%, and I warned you guys about getting into it because normally you're not going to see that kind of cryptocurrency just continue to moon. Of course, Eternal token has proven me wrong, and it has shown that sometimes that does happen. Normally, you want to be careful, though. One thing that I did say in that video was also that DEX was the biggest loser. I think it was down like 25 or 30%. Again, you can watch yesterday's video to see if I'm right on that. But DEX was very, very far retraced, and I said that a lot of times when you see a cryptocurrency retrace double-digit percentage points, and it's an anomaly, not if the whole market is doing that, but if it's the biggest loser for a day, if you see DEX being down 33% for some reason, normally you're going to see some kind of bounce. And as we can see today, DEX is up 15%. Very good opportunity to make some money if you ever see that happen again. Let's see if there's an example of that today. Not really. Aurora's down 12.5%. I wouldn't really call that a major reduction in price action, but let's say Aurora was down 30% and there was no fundamental reason having to do with the project or a technical reason having to do with the chart or the market forcing it down that far. Normally you're going to see some kind of bounce as people buy in simply because they think there's going to be a bounce, and a lot of times you can make a lot of money doing that. So that's something to keep in mind for the future. As we can see here, though, most of the market is red. Probably about 80% of the cryptocurrencies here in the top 10 are in the red. Anyway, one thing I do also want to talk about is volume. You guys know volume is a very important indicator. I don't talk about it enough on the channel, but it is very, very important. Bitcoin currently has a daily volume of around $5 billion and a little bit lower. Ethereum is around 2.4. Definitely a good amount of volume there. And XRP has around $500 million worth of trading volume. Anyway, there's not a whole lot to talk about on Bitcoin. So pretty quickly here, we're going to get onto the stock market because, as you guys know, I prefer talking about cryptocurrencies, but the stock markets have a lot of have very serious implications on the global economy, on Bitcoin, and on our day-to-day lives. So I do also want to talk about it. But what we also see here on Bitcoin is, like I said earlier, Bitcoin was above this uptrend of support, broke bearish, and moved into this little kind of pennant, kind of descending triangle pattern. I guess you can call it descending triangle pattern or pennant, but however you want to look at this, the point is here, Bitcoin is in a little tightening formation, a consolidation pattern, if you will, and typically you're going to see some kind of big breakout of this in a similar way to how we saw a big breakout when we first went below this uptrend of support. That's one of the reasons that consolidation patterns often lead to very major breakouts. For example, when you have a consolidation pattern like this, and you have the market run up into it, and you go into a pennant right here, into a little triangle symmetrical consolidation pattern. Normally, when you break out of a pennant like that, you're going to see a very major breakout for two different reasons. One of the reasons is all this inertia and all this pent-up bullishness in this case, pent-up bearishness if it was going in the other direction, if it was going down, but all the pent-up bullishness in this case just it all kind of comes to a head when you finally get out of that consolidation pattern. That also, coupled with the fact that you're breaking a level of support or resistance right there, typically leads to a very major breakout, probably like a 5 to 10% breakout, depending on how large the pennant is and how large the movement is. In something like this, if Bitcoin breaks this downtrend of support, it'll probably move down a couple percentage points. It'll probably move to the downside, probably down to around $3,600 to test support, and I'll show you why. I do kind of expect that Bitcoin's going to break bearish out of this pattern, but time will tell on that. I'm not really making that call. What I think is probably going to happen in the next couple of days and on into the next week or so is that Bitcoin's going to complete this inverse head and shoulders pattern and come on down here to around $3,600 before starting to move to the upside. Because even though the stock markets are doing very, very poorly, I think we can all agree on that, at least in general. Over the last 48 hours, they've done okay. But in general, they've done pretty poorly. Even though they're doing pretty poorly, Bitcoin's actually been doing rather well in contrast to the way the stock markets have been doing. Bitcoin rallied 35% in the span of about a week. We saw a very major bullish piece of price action come out of Bitcoin, the likes of which we haven't seen in a long time. So I do think that the momentum in the Bitcoin market anyway is moving more from bearishness to bullishness, and it also almost seems like the Bitcoin bear market of 2018 called a stock bear market in 2019, and stocks are going to be entering it right as Bitcoin is supposed to be coming out of its bear market. Now, of course, I'm not going to go too deep into this, but we don't know whether or not a stock market bear market is going to be good for Bitcoin or bad for Bitcoin, because this is completely unprecedented. There's never been a bear market in the stock market since Bitcoin has existed, so we're definitely going to have to see how that plays out. I'm inclined to believe that Bitcoin's going to do okay. I'm not necessarily saying a stock market bear market's going to be really, really good for Bitcoin, but I'm inclined to believe that the correlation between the two, for one, is very low, and I'm inclined to believe because of that I don't think it's going to have massive implications on Bitcoin. Anyway, let's go ahead and look at the S&P 500 here and get into the stock market analysis, because we have something interesting here that has formed and developed on the S&P 500, and that would be this big green candlestick the day after Christmas. Of course, we had to wait until the day after Christmas to get a green Christmas. We had a red and green Christmas here. We saw we were red, and then we turned green. But the S&P 500 did have a nice little, I think that was about a 5% move here. Let's check. Of course, we opened down here at around, what was that, around 235 points. It's actually like 2,350 points. But we see that the S&P 500 opened down there and ran up about 10 points, or also about 100 points, depending on how you're charting your S&P 500. And now, the next day here on the 27th, we've opened recently, and we haven't been trading for very long, but the market is basically trading sideways for the moment. But what does all this mean? Why is this important? Why am I making a video about this one green candlestick? Of all the things I can talk about, believe me, there's a lot to talk about. Why am I talking about this? Well, there's one reason I'm talking about this, and that is because of the location and the placement of this green candlestick. Because if we check how far the S&P 500 retraced from all-time high, it's almost exactly 20%. And 20% is the golden number in the stock market. I know a lot of you guys work primarily in crypto markets, so I'll go ahead and give you some of the more basic lingo and some more of the basic TA in stock markets. The 20% retrace from all-time high figure in stock markets is very, very important. And a lot of people in stocks look at that as an entry point for a new bear market. Of course, in Bitcoin, we have many different technical indicators that tell us we're entering a bear market. In stock markets, typically the way that you determine whether or not you're in a bear market is if you are retraced 20% from all-time high. That comes from statistical analysis of how often markets enter what everyone would consider a bear market. And most often, when you retrace in between 16 to the more widely accepted 20% from all-time high, you're entering a bear market. And we see this bounce happened exactly on the 20% retracement level. We also see that happened perfectly down here on the 200 weekly simple moving average. I've talked about this moving average for the S&P 500 a couple times, but this is a very, very important moving average, especially on the Dow Jones Industrial Average. I'll show you that in a second. But for right now, we can see that the market has gotten support on this level and on this uptrend of support a couple times. Right back over here, not so much right here, but you could call this a bounce right there. And back over here in late 2011, we saw a bounce as the S&P 500 was starting to go on its 10-year bull market. We also see that we had levels of resistance right there in about April of 2010. So it is an important uptrend of support, and it does just so happen to be right below us, right at the 20% retrace from all-time high level. As you can see, it lines up perfectly. So what does that mean? Well, what this means is that we have an opportunity for this bear market to be averted, and the crisis to be averted, and for the S&P 500 to start moving back up and go back on a new bull run. Is that what's going to happen? Well, I'm extremely skeptical on that, and I would bet a lot of money that that's not what's going to happen. I would bet a lot of money that what we're seeing right now in the S&P 500, because of a multitude of different factors that I'll go into in a second, is just seeing a little bit of a bounce, a little bit of a temporary bullish correction, and we're probably going to be breaking that 200 weekly simple moving average within the next 3 months, probably within the next month, probably by the end of January. Anyway, we do see this little bounce here, and like I said, a lot of people have been calling for this. A lot of people have been expecting some kind of little bounce here off of that 20% retracement level. 20% retracement level and the 200 weekly simple moving average. A lot of people were expecting this bounce, so it's nothing really out of the ordinary. But that does lead us to the question that I just answered: is the S&P 500 going to break that? And I think it will. Let's go ahead and look at a lot of different markets, because I can also show you what I was about to show you on the DJIA. And we can see that the Dow Jones Industrial Average has also had a little bit of a bounce here. I have some old TA over here that I need to get rid of. But if we look by retracement from all-time high, the Dow Jones Industrial Average is doing the exact same thing. It retraced about 20%, getting very close to entering that bear market territory, and then deciding to bounce here over the last 2 days. And it's not near its 200 weekly moving average, but that moving average is giving it support down here a little bit above 20,000 points. But we look back in history just to prove how important this moving average is. It also shows up on the Dow Jones Industrial Average with resistance right there in the same place as on the S&P 500, and support right there in the same places on the S&P 500, and support in both cases right there on the S&P 500. So it's an important moving average, and I do like to see that the S&P 500 is currently above it. But like I said, I don't think that's going to hold, and once we break that, that's going to be the catalyst for a lot more bearish price action to come. Let's look at some of these tech companies, because of course we would assume, and we can decide by statistical analysis and also by polls and whatnot, that a lot of people that are in FANG stocks, for example, Facebook, Amazon, Apple, Netflix, and Google, a lot of people that are in these big tech stocks are also in Bitcoin. So it's important to look at what these stocks are doing for ourselves since we're in Bitcoin. And what we see with Amazon here is that just like the rest of the market, it has seen a little bit of a bounce here following Christmas. Amazon is well and truly in a bear market by the definition that people in the stock market use, is down by about 35% and testing support on the 100 weekly simple moving average. Good luck to Amazon on that. I hope you hold that, because I don't really want to see Amazon go too low. That's a very, very, very big company, and we don't really want to see Amazon start doing poorly no matter what you think of Amazon. Anyway, we also see a similar thing happening on Google, Alphabet Inc. We see it's retraced about 25% and getting a little bit of a bounce. Right now, it's actually testing resistance on the 100 weekly moving average. We'll see if that holds. Let's look at AAPL, that would be Apple. I want to mention, by the way, a couple days ago I talked about, no one called me out in the comments for this, but it was such a massive mistake. I wanted to correct myself. A couple of days ago I misspoke. Of course I know this, I just misspoke. I said that the Great Depression started on Black Friday 1929. I meant Black Tuesday. I just said Black Friday because I was thinking about something I bought. Anyway, I wanted to correct myself on that. But Apple is down by about, let's see what Apple is down by. I believe it's around 35%. Yeah, we're down around 35% and getting a little bounce here. Anyway, I think you guys get my point. There is a nice little bounce coming in here to the stock markets, excuse me. And I would like to see this bounce. I would like to see the bull market continue. I would like to see, for the short term anyway, for the greedy short term part of me that wants the market to do well so that the market doesn't crash. Of course, we would all like to see the market start doing well and continue moving up, and for the bull market to continue, and for all of the problems that the current global financial system have to just evaporate. But sadly, guys, that's not what's going to happen. It's just not going to be that easy, because we've been on a bull market for 10 years, guys. The stock markets have been roaring since February of 2009, and that was almost a decade ago. A decade ago, 2 months from now. That's a very, very long time that the stock markets have been doing very well. So you guys who are in the stock markets and you guys who are in the cryptocurrency markets in 2016 and 17, we made a ton of money, guys. But the problem is the way that we made this money was not sustainable. We've seen that the market has gone on a ridiculous bull market. This is not something that you normally see out of a stock market. There are a lot of underlying fundamental problems behind this massive bullish piece of price action. Of course, we do see that the global economy has grown, as nearly doubled in the last 15 years, if I have that number right. It's gotten very, very big. There's a lot of money in the S&P 500. The S&P 500 is down 20% from all-time high, but it's still worth something like, I want to say about $19 trillion. I don't know the number off the top of my head. It's worth a lot of money, but we have a lot of fundamental problems that have led to this massive run-up that are going to come to a head when a new bear market starts. So if you guys are interested in my take on where I think this new recession that I think we're going to be entering is going to be going, you can watch that video in the top right, and it'll also show up on the end card. But that's basically going to do it for this video, guys. I do want to thank each and every single one of you for watching, but first I also want to ask you guys to tell me in the comment section down below what you think of the Bitcoin technical analysis in today's video. Do you think Bitcoin's going to break that little uptrend of support and move down towards its 200 weekly simple moving average? As you can see, Bitcoin is also getting support down here in a similar way the S&P 500 is. Do you think Bitcoin's going to get support down there and continue moving upward from here? Do you think Bitcoin's going to break a bearish out of this pattern? And most importantly, sorry Bitcoin, but the S&P 500 is extremely important for everything, not just our investments. Do you think the S&P 500 is going to get a bounce here off of the 200 weekly simple moving average and continue moving up somehow? I think that's very unlikely, but tell me in the comment section down below what your opinions on the matter are. Also, I want to mention something kind of interesting. I ran a sale for the Cryptocurrency Technical Analysis Academy for 5 days. It was a 20% off sale, and then after the sale was finished, I had like 4 or 5 of you guys buy the course for full price. If you're any of those guys, I might email you and ask you. If you're any of those guys who joined the course right after the sale ended, I'm just curious why, because, you know, there was a sale going on. Were you just trying to be nice? I don't know. I'm not complaining. Don't get me wrong. I was just kind of curious about that because a lot of you guys decided to go and join the Cryptocurrency Technical Analysis Academy and buy it at full price. So I'm very happy that you guys felt willing to do that. And I do think the product is worth every single penny. I'm not discounting the value of the product. I just thought that was kind of funny that I had a bunch of people join the course the day after the sale ended. Anyway, guys, there are going to be sales in the future, and if you want to check out what we have in CT2A, even for the full price of $149, it is a very, very good product in my opinion. You can check that out in the description down below. Anyway, guys, I do want to finally thank each and every single one of you for watching as always. And crap, I forgot to say one more thing, and that was that yesterday I didn't have any coffee, guys. You guys make fun of me for drinking like a gallon of coffee every single day, and I didn't have any coffee yesterday. So tell me in the comment section down below if you noticed that. Now, finally, I want to thank each and every single one of you for watching as always, and I will see you guys in the next video. Peace.